Any particular areas of the world? I mean, do you look at emerging market debt and play that off against developed ones?
Yes. So the developed world, the US, again, recessionary scenarios have come closer. Right now, we see a very benign growth in the US and likewise in Europe around the 1%. And hence, it's definitely important to look at this part of the world. So we remain bullish on Asia and on China. We have a growth projection that is even above the government's target. And so that divergence should be playing out also in terms of asset class returns.
And how do you look at equities now, Stephanie? Because it seems like we're seeing global stocks close to the year-to-date highs. You're seeing bull markets close to that when it comes to Korea. India's close to record highs once again. And how much interest are you getting in Japan in particular? And does that kind of leave China in particular left out in some way?
We look at this from a technical perspective, and we look at valuations at this point in time. So just to go into the China equities, you know, we have been in this trade for a long time. We have been starting to be cautious, optimistic back in October. We have been scaling up, and we have been into the trade. And it has been peaking in January this year when it became a consensus trade. Now, this consensus is starting to price out. Sentiments become really bearish and negative on China. And you look at the valuations, especially compared to developed markets, this is the time to be considering that trade again.
Well, I mean, valuations are quite something when it comes to China. But, you know, as you've alluded to, the whole idea, the reopening story seems to have fallen a bit flat. What do you do then?
It hasn't fallen flat. It's just more of an uneven recovery, and it takes longer. And the blueprint that we were having from the developed markets does not play exactly out in China. But you were asking me about the relativity of geographies and where the growth will come from. And I think there is overall understanding that this growth is being found here in the region, and that China is a very important part to that complex. So, of course, the region is benefiting also a bit from the demise of China at the moment, because you see, we heard this at the G7 meeting over the weekend. There's a lot of de-risking.
Yeah.
You know, supply chains are being put into the region. You know, that is one part of an angle for the region. But also, of course, China is still also very much engaged in terms of traveling here in the region.
Is that why you're favoring EU equities over the US?
We are favoring definitely Asia over developed markets. But when you look at US versus Europe, we are favoring Europe over the US. And that's, again, a valuation at this moment in time. But then again, we have been in this trade for a long time. We have been highlighting early on that the recession fears around Europe have been overdone, and we have seen economic surprise indices to outperform consistently. Right now, you look at the valuations, the Stoxx Europe 600 trades at 30% of PE discount to the S&P 500, you know. And even you look at the 10-year median PE, then it even has a 15% discount. So even in the short term, this trade still holds.
Yeah.
Stephanie, thank you so much for joining us. Stephanie Holzschender from Deutsche Bank International Private Bank. Right, quick look at some of the business flash headlines. JP Morgan said to gain an even bigger boost from rising interest rates thanks to its purchase of First Republic Bank. It raised its guidance for net interest income this year to $84 billion from $81 billion. But JP Morgan also seeing second quarter revenue from trading and investment banking to each slump 15% from a year ago. Abu Dhabi sovereign wealth funds Mubadala Investment and Fortress Investment Group have agreed to buy SoftBank's stake in the U.S. asset manager. Mubadala will own 70% of Fortress equity, while Fortress Management will hold a 30% equity interest. Meanwhile, sources say SoftBank is working on plans to become a lender in private credit.
All right, taking a look at the movers here. When it comes to the region, it is Kuaishou that is still outperforming this market here today. We're up 5% in Hong Kong. Tencent's unchanged. They did get gaming approvals from China in May. We're watching also some of these automakers with Ford now really building out its EV business, and they're saying that they could sidestep and overstep the likes of BYD and Tesla. Take a look when it comes to Nikkei futures, India futures as well. Of course, with those markets opening up in a few minutes' time, we'll talk you through it. But we are also near record highs when it comes to some of these Indian stock benchmarks too.
Yeah, there's that rally, that's winning streak for Japanese equities going on. They reopen in just under, 3 minutes, 4 minutes, I should say here as well. Also comes against this backdrop of the Indian Prime Minister being in Australia for top-level political meetings and events with the Indian community. We're going to be live in Western Sydney. This is Bloomberg.
All right, welcome back. Japanese markets coming back online from that lunch break, and it looks like this rally can continue here for a 9th straight day here, and really on track to almost, if we hit 10, the longest winning streak since 4 years ago, basically. You take a look at how we're doing in the Nikkei 225. We're well above that 31,000 level here right now. Today was really, we saw a stellar set of PMIs that came from Japan as well, which was another catalyst when it comes to equities there. And, you got to wonder what really is going to bring down this rally too, Rish.
Yeah, I mean, at the moment, if you look at the industry groups, only 5 of them which are currently on the way down. All the others are on the way up. Pulp and paper index, actually the biggest gainer so far. Today, 3.3% up. Right, well, indeed, we did catch up with the chief executive of Japan's third biggest online broker. It's called Monex, and he asked a question that you were saying. What's the outlook here for equities there in Tokyo?
If you calculate all companies whose shares are trading below a price-to-book ratio of 1, if those shares to be fixed to trade at par to the book, then Nikkei would be trading just less than 40,000 yen. So this is just a kind of, just a mathematics. But I think there is 20-30% kind of room for Japanese Japanese equity market to go up.
All right, that was Monex Chairman and CEO there. Let's get to the first word news now. We got Vonnie Quinn in New York. Hey, Vonnie.
Hey, Yvonne, thank you. President Biden says he and House Speaker Kevin McCarthy had productive talks and agreed that a U.S. default is, quote, off the table. The two met at the White House for more than an hour, but have still not reached a deal. Treasury Secretary Janet Yellen has warned it's highly likely her department will run out of sufficient cash in early June. McCarthy says he expects to speak daily with Biden until a deal is sealed.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about.
Two Fed hawks see the need for more rate hikes this year, just days after Fed Chair Jay Powell signaled a potential pause in June. St. Louis Fed President Jim Bullard says he's backing two more increases, while Minneapolis Fed President Neil Kashkari says a pause does not mean tightening is over. Their comments bolster the case that they might skip a move next month at the